Hi everyone, welcome to this special edition video of Midweek Market Update. I'm Ashley Rosser of Victory Fiduciary, and today I'm sure we've all seen the headlines that overnight last night Russia did invade Ukraine's borders, and so I really just wanted to spend a couple of minutes to kind of touch base on implications or maybe not implications that are occurring as a result. First and foremost, obviously our thoughts and prayers are with the people of Ukraine as well as the civilians of Russia. This is certainly a heartbreaking situation that we are watching unfold, and so certainly praying that this will be a short-lived situation for them. So that being said, if you were watching the news on social media, you likely saw many different types of headlines, particularly if you were looking regarding the stock market. Bloody Thursday, stock market crash 2022, Russia invades, stock market collapses. So these were all kind of things that I was seeing this morning as I was scrolling through, trying to kind of get my finger on the pulse of how the markets were going to react to this invasion. And this morning, markets were not responding very well. The Dow was down at one point over 900 points. NASDAQ was down almost 3%. S&P was down about 2%. And so I think what we were seeing was a lot of knee-jerk responses, particularly from individual investors who were making decisions to kind of sell quickly, selling on the news, so making these kind of emotional responses. And so it's been interesting. We've been under a lot of pressure over these past, really since the beginning of the year. We've had in-depth discussions over the reasons for the pressures that we're seeing: inflation, Federal Reserve interventions, and kind of what they're needing to do to kind of quell the inflation that we're experiencing, as well as geopolitical strain. And so what we saw this morning was really this market sell-off, and as the day has progressed, we have seen a complete reversion of stock market prices. And so the Dow Jones, which I told you futures were down at 1,900 points when I just checked, have recovered all but 250 points. S&P 500 as of 241, positive. NASDAQ as of 241, positive, over 1%. Real estate positions are now positive. We're seeing technology positions positive. Large cap growth, many of them are also positive. And so it's interesting that we had such negative sentiment kind of coming into this morning, and then just kind of how quickly, and it just really goes to show the importance of not making knee-jerk decisions in a market. So we're going to talk about kind of where we are with technicals, and hopefully I can give some reassurances in terms of kind of what we're seeing and why things may not really seem as bearish as they may feel right now. And so the first chart I'm going to show you, this is just the current chart of the S&P 500 right now, year to date. And so as you can see, we've really just been under just really extraordinary pressure. So this was as of yesterday's close. As a reminder, though, remember, going back to October, we're really, yesterday we did violate some of where we were last October, although after today's movement, if these hold, we'll wind up kind of closing above higher. And so again, it's really, you can look at it the same way as we've just gone nowhere since October, that we've essentially kind of traded sideways. There's been a lot of volatility and choppiness, but I think that it's a little easier for us to get our minds wrapped around, oh, just since October, it kind of, when we look at it with that lens, that it's kind of a little easier to kind of wrap our arms around of what's going on. It doesn't feel as painful when we say it that way, as opposed to seeing what the performance has been kind of year to date. And so this is the NASDAQ, very kind of similar, really been under pressure. One of the things I want to point out, though, which is the case of all the indexes, we are very oversold. We are oversold across really all the indexes. And so everywhere would not be unexpected at all to see a reflexive rally, kind of like a nice pop in price action. I would expect to see that. So the fact that the NASDAQ and the S&P have held up so well today, despite all of that, the negative sentiment and the selling that we saw early on, I actually think is very encouraging, that maybe markets really are close to kind of finding a bottom through this corrective process. I think it could have gone either way, and I think if the bottom had kind of fallen out today, that might have been something to really continue to watch carefully. I think that it is encouraging and kind of reinforcing this thought that this is just a normal corrective process that markets kind of needed to work through. And so what I wanted to show you now, because I thought this was interesting, as I was doing some research, I actually had kind of forgotten until we came back into this process that back in February of 2014, Russia invaded Ukraine for the first time. And so I wanted to look back and see, well, what did markets do last time? And so markets had been already under some selling pressure coming in, kind of similar to what we've been experiencing now. They had seen some volatility, they'd had some negative performance, and then you can see they began to really struggle here. This big dip here was the day that Russia invaded, and this was actually wound up being the bottom of that corrective process. And then there was a very sharp rally that began after that, and it lasted for months after that. So very interesting to think that if you had said, oh my goodness, World War III is happening, Russia invaded Ukraine, I'm going to just sell everything and kind of wait for the bottom. Well, that was the bottom. Now, is that going to be the case this time around? I don't know. There's a lot of other kind of precipitating factors, particularly that are kind of hampering the economy right now. They may weigh heavier on markets, but history also does have a habit of repeating itself. And so I think this is my words of, I guess, caution would be as investors to just make sure that we're not making knee-jerk decisions. Make sure that we have a process. You should have rules that you're following. That if you're selling a position, that it's clearly violated one of the rules that's been set, and that you have a buy, you know exactly why you're going to buy something and when. And so those are kind of important things to keep in mind. And so I think really when we look at our short, intermediate, and long-term indicators, believe it or not, there's really not a whole lot going on to cause us really great concern right now. Obviously, there's things that we watch every day, but there's nothing really going on to make us feel like from a technical standpoint that there's major issues. I think this Dolly chart, remember, dynamic asset level investing, this is an area that these positions arm wrestle each other every day, and there are winners and losers, and over time you can develop and determine trends. And so one of the shifts that we saw, this happened back last month, was commodities did jump over domestic equities, and that's just because energy has been having a run for the past couple of months. But second to energy, domestic equities is far and away still the best place to be. And then no surprise, energy, financials, which has really been a great position really since last spring. Basic materials, technology, all kind of in the top 4 sectors still. And then we've got the mid cap, small, large growth. And so something else to be kind of in consideration of, the 3 weakest areas, fixed income, cash, and currencies. And so again, very reassuring that right now within the market itself, that these are kind of just normal pullbacks that we're expecting. Now, is it possible that when the dust settles, if that's not today, maybe we'll see some rotations of things that kind of come out as leaders? Of course. But all in all, really everything is kind of pointing to the fact that this is likely just a normal, necessary correction to allow the market to kind of gather itself and go on to again reach new highs. And so while certainly we don't want to undermine the tragedy that's unfolding in the Ukraine and just the damage that's being done there to its people, when we look at its effect on the market for now, I think that we really just need to pay attention to the fact we don't want to be making any decisions as an emotional basis. Now, if you're really feeling uncomfortable right now and you're really feeling like I don't like this, then you may want to consider at some point determining if you have too much risk in your portfolio, and that would be maybe something, and that's typically a decision that you want to make when you're not in the midst of a geopolitical crisis. So as always, you're always welcome to give us a call, reach out to us at Victory. My email, ashleyr@victoryfiduciary.com. We're always happy to help. If this is the first time that you're tuning into one of my videos, I encourage you to kind of go back, look at some of my other videos. I just did one last week, really kind of talking about the whole landscape of the market and what we were seeing from a technical basis. And again, why this week wasn't really unexpected. We thought we might still have a little more volatility to go. So thanks for tuning in today. I hope you're well, stay safe, and we look forward to seeing you soon.